Hello everyone, this video covers calculations given certain amounts, and then you need to solve for, let's say, the unknown. So if we look at this example here, it says given the following account balances, calculate the owner's equity using the highlighted numbers. So we're going to have a look at the balances of these accounts, and we're going to calculate what the owner is worth, the owner's equity. Let me just clean this quickly. So if you're familiar with categorizing accounts, we've got different categories of accounts here. Capital is its own category, drawings its own category. Reminder, capital is what the owner puts into the business. Drawings is what the owner takes out for his or her personal use. Then we have, in this slide, we've got income accounts, sales, rental income, and interest on fixed deposit. And then we've got expenses, cost of sales, telephone, wages, rates and taxes, insurance, and bad debts. The question was, calculate the owner's equity. Now you might remember, there in the corner is the DICE. It's an acronym for what affects owner's equity. There are two ways to calculate owner's equity. You know that. Assets minus liabilities. Or you can apply the DICE acronym. Capital, what the owner puts in, less drawings, plus income minus expenses is going to give you what the owner is worth. Right, these are the accounts that were highlighted. We're calculating owner's equity. And I've told you owner's equity is equal to capital plus income minus drawings minus expenses. And if we get out our calculator and we apply that formula for owner's equity, you should get to 187,194. In this example, we were given the balances of capital, drawings, income, and expenses. You might get an example where you're given the values of all the assets and all the liabilities, and you're asked to calculate owner's equity. But yeah, we were given capital, drawings, income, and expenses. Just by the way, income and expenses, the difference between the two is either a profit or loss. So owner's equity, yeah, could have said capital plus profit minus drawings. Just a tip for a future calculation. Right, given the following account balances, calculate the profit of the business. Okay, I've said yeah, ignore cents. Right, we're not going to worry about calculating the cents in this example. Imagine there is no cents involved. Right, so we're calculating the profit, and everybody knows profit is calculated as income minus expenses. Now what you're given in front of you is the trial balance of Calibre Education on the last day of February, and this is just an extract, a part of the trial balance. You're given the information you need, the nominal accounts section. So you're given the income accounts and all the expense accounts. Because how do we calculate profit? Income minus expenses. Expenses always have a debit balance. Income always has a credit balance. And if you know how to apply your rules, let's say for example, we paid for the telephone's an expense, increase in expense, the account will be debited. Increase in income, the account will be credited. That's how these debit and credit balances are derived, by applying the rules in the transactions that affected these accounts. But the question was, calculate the profit or loss. And profit is income minus expenses, when income is greater than expenses. So if we add up our income, there it is, we get 181,972. If we add up our expenses, we get 170,024. There all the expenses are listed. And the formula for profit is income minus expenses. Just want to clean this a little bit. There we go. So we need to find the difference between income and expenses. And there, that is the profit at the 28th of February for Calibre Education, 11,948. Income minus expenses. If you were given a full trial balance and they asked you to calculate whether there was a profit or loss, this is actually the net profit, because it's all income minus all expenses. Right, let's move on. Given the following account balances, calculate the total value of the assets. Very easy. All you need to know is the definition of an asset, and you need to classify these accounts as either assets, liabilities, capital drawings, but they're asking for what is the total of the assets. I've highlighted the assets. Special mention here, a fixed deposit. If you take out a fixed deposit with a financial institution, that is a financial asset, it's an asset. Right, fixed deposit, if you have extra cash and you want to invest it at a higher interest rate, you can take out a fixed deposit. That's an asset. Vehicles, asset. Equipment, asset. Those are non-current assets. Fixed assets, long-term assets. Trading inventory, accounts receivable, input VAT, bank and petty cash are current assets. But the question was, calculate the total value of all the assets, non-current assets and current assets. Easy. You add it all up, 790,672. Next question. Calculate the following account balances. Calculate the value of the total liabilities. Now, liabilities, an increase in liability, the rule says the account must be credited. So these liability accounts end up with credit balances. Sometimes in a question, you're not going to be given a debit and a credit column. You could have one column with all the amounts. Okay, they want the total of the liabilities, all liabilities, non-current and current. And I highlighted the liabilities that are on this trial balance. There was a loan. Output VAT is a liability. More about that when we do VAT. Creditors control, you know, as accounts payable, right? Creditors control, accounts payable. Those three items are liabilities. The question was what is the total liabilities? And if you add the three together, you get 132,561. Next calculation. Given the following account balances, using the accounting equation, calculate the total of the unknown. So we're going to use the accounting equation formula, which is equal to assets equals owner's equity plus liabilities. Some people can do this calculation as follows. Owner's equity is equal to assets minus liabilities. It doesn't matter too much. You're going to get to the correct answer. Or what happened was, yeah, the subject of the formula was changed. But we're going to stick to the accounting equation as it appears in the statement of financial position. So let's answer the question. Given the following account balances, using the accounting equation, calculate the unknown. Capital is unknown. The accounting equation, assets equals its liabilities plus owner's equity. I like it, assets equals owner's equity plus liabilities. So what we need to do when given a question like this, bank has a positive balance, it's an asset. Mortgage loan is a loan, it's a liability. Motor vehicles is an asset. Capital falls under owner's equity. We're using the accounting equation, assets equals owner's equity plus liabilities. So I go and put the assets in, bank and vehicles, bank and vehicles. Capital we don't know, and loan we do know. So I've substituted the accounts into the equation. Then I substitute in the amounts. We got bank 120,000 and vehicles 200,000. Capital is the unknown. You could have used the X to represent capital, and the loan is 300,000. Now we need to solve for the unknown. Capital is unknown. So if I take the 300,000 across and leave capital on its own, when we go across the equal sign, that plus sign will change to a minus according to maths laws. So there we got 120,000 plus 200,000 minus 300,000 is equal to capital. Then we just need to simplify the left hand side. And if we do that on our calculator or in our mind, we've got 320,000 minus 300,000 is equal to 20,000. What is the capital amount? The capital amount is equal to 20,000. Now if you're given a question like this, you can get a whole list of account balances and then you solve for the unknown. They could have said solve for mortgage loan, then you would have had loan as the unknown on its own, and they would have given you the capital amount. So what I'm saying is, sometimes they say calculate motor vehicles, calculate bank, but there will always be one unknown. If there are two unknowns, you won't be able to calculate it using this method, using the accounting equation. There will always be one unknown. Right, let's move on to another example. Now it says, given the following account balances, calculate the net profit using the accounting equation. The net profit. Now net profit is income minus expenses, but we're going to use the accounting equation. So we got asset, 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 owner's equity, liability. But inside owner's equity will be net profit, because income minus expenses, income and expenses affect owner's equity. And income minus expenses will either be the net profit or the net loss. But they're saying, yeah, we're going to calculate a net profit. So let's see if there is a profit. So we use the accounting equation, assets equals owner's equity plus liabilities. You substitute in inventory, which is an asset, equipment, vehicles, all the assets, is equal to, in brackets, I put owner's equity in brackets. I've expanded owner's equity. Capital plus profit minus drawings. And liabilities is plus accounts payable. Now I put in the amounts. 120,000 inventory, equipment 100,000, vehicles 200,000 is equal to, the capital was 400,000. We do not know the profit, and the drawings was 30,000. So X is representing profit plus 50,000, which is the liability, accounts payable. We solve. First of all, what I did was I simplified the left hand side. 120,000 plus 100 plus 200,000 is 420,000, is equal to 400,000 minus 30,000 is 370,000 plus X, which is representing profit, plus 50,000, which is accounts payable. I get X on its own. So I take the 50,000 across, the plus becomes a minus. I take the 370,000 across, it becomes a minus. 420,000 minus 370,000 minus 50,000 is equal to the profit. And this coincidentally works out to be 0, because 420,000 minus 370,000 minus 50,000 is equal to 0. So in this example, no profit was made. So we can say the net profit was 0. So these are examples of calculations that you can get in a test. Remember, the unknown can be capital, it can be equipment, it can be inventory. But what you're doing here, using the accounting equation, is you're solving for the unknown, whatever the unknown may be. So these are typical calculations that you can receive in a test. Go through this video a few times, see if you can find exercises like this in your textbook, or even you can search on AI. Give me examples of using the accounting equation and solving for the unknown, and see what comes up. You can even set yourself a test. Okay, all the best. Remember, you can watch the video over and over if something was unclear. Cheers. Bye.